Okay guys, what's up, man? This video is going to be on how to use Fibonacci. Now, Fibonacci is like a tool that helps. It's a tool that helps give you an idea on when to get back inside the regular trend. Now, I'm going to try to explain. I'm going to try to take it as slow as possible, okay? Because it took me a while to get to understand this, but that's okay. Okay. This right here is a downtrend, all right? Okay? This right here, give me 1 second. This right here is an uptrend. Overall, it's an uptrend, okay? Now, what these are counter trends. These little small pullbacks, okay? These are counter trends, okay? I don't counter trend trade because it's too risky, okay? That's just my opinion. Remember, trading is very subjective, so whoever you're learning from, learn, develop, and then if you want to switch up or do something later or learn from somebody else down the line, then you do that. But it's very, very important that when you're first starting, stick to one thing, because there are a million ways you can make money inside the market, okay? You can't learn and do everything, okay? What I mean by counter trend is, okay, this is a bullish trend. It's an upward trend, but these little pullbacks are when sellers try to come in and take over temporary, but it's just a pullback, okay? What a pullback is like I said, sellers are trying to take over. When the market starts to pull back, that's when you pull out your Fibonacci tool, okay? And I'm going to give you an example. And the Fibonacci gives you an idea, helps you determine on when to get back in on the trend. So, with that being said, I'm going to pull out the Fibonacci tool and I'm going to start explaining it. Okay? You have to, on an uptrend, you draw it from a relative low to a relative high. Now, there are a couple ways you can do this, okay? I'm going to go over, this way real quick. This low to this high. And I draw it from the tip of the wick. Okay? The lowest point of that wick to the highest point of this wick. Okay? This is very important. Okay? The price reversal zones are 38.2, 61.8, 78.6, 88.6. Now, as you can see, 50% it can reverse off 50%. I've seen it sometimes, okay? But the ones that I just called out are the main ones. Now, it's very, very important that you understand this is a big part of structure. Like, you do not want to get in your order early, okay? Like, for example, as you see, this is pulling back. Now, people that counter trend trade, they would sell at this opportunity. Me, if I know that it's breaking structure, like, this is structure, okay? This candle broke structure, okay? And when it did, it went up and it's coming back. It's testing this area of newfound support right here. That's what this pullback is. It's testing. Now, as you can see, all of these green candles, right? Now, once you see these three blue candles back to back, okay, and this candle right here, once this blue candle closes over this green candle, that's when you know buyers are back in control. That, in this situation, that's the safest time to get back in your order, okay? So with that being said, as you can see, it didn't tap 61.8, but in my opinion, I would still consider it a 61.8 retracement. It found structure at 50%, but it tried to tap 61.8. So when you're in your buy order and it starts to pull back at this candle right here, that's when you would place another buy order, because you know buyers are back in control. And then too, there's a bullish engulfing pattern. right here. Bullish engulfing. My candles are blue and green. You can change them, but my blue candles are bullish. My green candles are bearish. So once you see that this green candle engulfed this, this blue candle engulfed this green candle, which means this blue bullish candle is bigger. As you can see, as it's coming down, you don't see any blue candles bigger than the green candles. That's because sellers are trying to take over. At this point right here, when this blue bullish candle is bigger than this green candle and it prints, okay, it prints, that's when you get in your order. That's when you know it's finna shoot up. See, look, you would have caught, let's see how many pips that is from here. And even though like you got in, right, it came down. This is why you have to use risk management. Like, even though it came down a little bit and it came back down to this area, but it's still like, that's when you know, when that green candle, when that bullish candle closes over the last green candle, that's when you know it's time to get in. Okay. And see this right here, if you would have just rolled it to right here, that would have been like 87 pips. That would have been a quick, quick money. So, very, very important. Okay. So that's how you use Fibonacci. It's okay. You know you're in the uptrend. When it starts to pull back, you pull it from the relative low on the uptrend. Now, if you're on a downtrend, it's from the relative high to the relative low. Okay. And it tells you, okay, I know once it gets to one of these lines that it's a high chance that it's going to get ready to reverse. So you want to look for reversal patterns. Reversal patterns, that's what I look for. Let me show you another example. Okay, let's do it again. From this low to this high. See, this low right here, the tip of that wick to this top of this wick. What did it do? Come down. Told you 78.6 is a price reversal zone. It came down to 78.6. What do you see? I'm telling you guys, if you just do what I'm telling you and look for this stuff inside the market, you'll be very, very profitable. See that bullish engulfing pattern? See how that all of this time you see green candles, little blue bodies, little blue. When I say green candles, for me, those are bearish candles. Big green bearish candles over the small green bullish candles. That let you know that sellers are trying to take over. But right here, once you see this bullish engulfing, the bullish candle prints and closes bigger than that bearish candle, that lets you know buyers are back in control. And guess what? After that candle prints, you get in your order and you write it up. It's that simple. Okay? It's that simple. Now, on another video, I'm going to go over, based off of these retracements, some projections you can use to help get out your order. Like me, I like to hold my orders. Once I know structure is broken, like, see, this was a downtrend. Once structure is broken, like, which means it starts making these right here higher lows, starts making higher lows and higher highs, that lets me know that we're transitioning to an uptrend. It's going to be trending for a little while. So I like to capitalize off of all of these moves as possible. So sometimes I'll hold my trades for a week. It just depends on what's really going on inside the market. Okay. So we'll go over structure and things like that in other videos. But Fibonacci helps you with structure because, okay, let's say this pulls back all the way and it breaks structure. This is how you know it breaks structure. If a candle comes back and closes over 100%, that means it's still a downtrend. Like, But right here, if I was to draw it from this low to this high and it retraced all the way back, and what I mean retraced is pull back, reverse. Retrace means this is a retracement right here. This is a retracement. This is a retracement. Okay, that means that it's pulling back. If it pulls all the way back and closes over 100%, that would let you know, okay, you're going into a downtrend. That's why using Fibonacci is very, very important. Okay, now let's find another example. Let's see, we draw it from this high to this low. As you can see, look, it found from this high to this low. That's how you draw it on a downtrend. As it started to pull back, it found support. Okay, look at this, guys. Like I wasn't even trading back here, but the market, I mean, it does the same thing. It found support at 61.8. What do you see? Bullish and bearish engulfing pattern. This bearish candle engulfed the blue candle. Okay, the bullish candle. Okay, it came back up. Now look, study your market patterns. Look, you see another bearish engulfing pattern, right? Came back up. You see another bearish engulfing pattern. So that lets you know, even though these little pullbacks, that lets you know once you see these candles printed back to back like that, and you're overall in a downtrend, that lets you know that sellers are taking over. And then if you look at your market patterns, this is a triple top market pattern. Okay, this line right here would be the neckline. So you know it found structure. It found strong resistance at 61.8, which is structure, same difference. Okay, and it came down right here again after this candle printed. This would be your confirmation candle right here. Okay, and even though on the smaller time frame, that's why sometimes you have to go to the smaller time frame, because these are 4-hour candles. So when all of this is forming, trust me, as these bearish engulfing patterns are forming, they're forming on the 1-hour time frame too. And right here, let me see if I can go. I'm gonna go back. Even though I bet you can, this is when I will go to my 1 hour to get a good entry. Let me see if I can back out. Okay, see how it broke this right here, and what it did, come back up and retest. This is your retest right here. Market usually always retests. Sometimes it don't, but most of the time it does. That's your retest. It broke through. It came back up, retested. That's when you get in your order and write it down. Take profit somewhere down in here. Okay. Came back up. It retested newfound resistance after it broke through resistance, right? I mean support. Came down. Retest. You short it again. Come down. Take profit down here somewhere. But we'll go through how getting into your orders and everything right now in another video. But that's just how you draw Fibonacci. And that's what you look for when the market starts to pull back. Look for bullish or bearish engulfing patterns to get back inside the current trend. Okay, so I will see you guys on another video. I'm gonna do another video over Fibonacci to show you another way you can draw it, but I'll do that and I'll get that on the next video. So I'll see you guys on the next video.